Wizards. Welcome to episode 23. I do believe it's episode 23 of Wizard Wednesdays. Now, again, it's been an interesting week in the markets. Unfortunately, not one of the greatest starts in the markets in terms of calls. We did unfortunately have one call that went a little bit downhill in comparison to the overall projection that was given. But as you know, this is nothing to worry about. We do not fret about this, and we are not here to shy away from any mistakes, accidents, or anything that goes wrong in the markets. We're here to own up, we're here to accept responsibility and understand when things go wrong, we simply improvise and adapt and identify the next setup, which fortunately, this episode in particular will be covering in further depth. Now again, if you actually look back to the charts before we get into this coin market cap aspect, and if you actually go to the charts, the current price point we're at is actually exactly where the original short position was projected from. Now, there's been some confusion from many of the newcomers in the market as well, trying, so a few people have said they don't really understand the calls too well. That's fine. We can clear that up here as well. We can get even more precise. If that's what you guys want, then we will get more precise in that aspects as well. Absolutely no issue. That's what the Wizard community is for. It's what the Wizard family is designed to achieve, and that is exactly what we will be achieving throughout this episode in particular. So, kickstarting with coin market cap, the BTC dominance has of course dropped yet again down to around 67.6%. So making higher highs and higher lows on a technical analysis perspective, we have just dropped from around the 68% milestone, which we haven't seen for almost 2 years now. Around the same time last year, we were sitting at 40 to 41%, which is pretty crazy to see, even dipping down to around 39%, 38% in particular. We have seen that number almost double now, up to 68%. At the present time of speaking, that has dropped over the past week by a few 0.5 percentages. However, it's nothing too drastic to really worry about. All we know is XRP is slightly falling right now. And again, before we get into this, I am not going to be entering XRP long until I see a very drastic drop towards the 25 cents region where longs can then be considered. BTC in particular for now, just before we even get into any technical aspect, BTC dominance is still very high, and anything this thing does will influence the price action. So looking at this right now, I'll be looking at long opportunities in a second from the 9,800 to 600 region, technically anywhere within this zone where the trend line retest will be fulfilled. We'll get into that in a second as well. Going back over to the market today, let's have a quick refresh and have a little look at this right now. So we're looking at around minus 5% today for BTC, which could very quickly be bolstered once we actually see price decrease further. Ethereum, not too bad, down around 1%, and XRP down around 1.5%. So overall, we're getting the gist here. Even Tether's down today, 0.05%. So it is acting as a stable coin, but it is still dropping as well in line with the market. So essentially, the BTC dominance even affects the pricing of Tether, which is pretty surreal. Bitcoin SV, not a fan of it, never will be. However, it is doing pretty good today. Granted, it is up around 5%, but that is not the issue here, and that is not the cause of focus. What we're looking at is BTC. So let's jump straight over to the charts and see what went wrong from the prior call. Guys, I also want to apologize as well. I've got a bit of a sore throat at the moment, so please bear with me if I do need to cough at any given moment. So going over to the first original call. The first thing we've done, August the 9th, is currently August the 14th. So 5 days ago, you would have seen I tweeted, used a bit of quick thinking to refine a very precise kill shot sniper entry above $12,000. Stops now in profit for this position. First initial position running smoothly alongside this. First two take profits, 10,900 and 10,450. Very simple stuff. As you can see from the $12,000 region, we did catch those shorts, and we were targeting these regions here, despite what everyone believed. Again, checking all the so-called experts online, everyone's claiming yearly high straight away, this, that, when they're clearly not looking at the bigger picture, and they're clearly focusing on their own, I guess you could say, potential gain and profit from the market in their own portfolios, instead of focusing on the price action themselves. So looking at this right now, the targets that were given, 10,900 and 10,450. We have actually seen 10.9, which was this region here. We tapped the 10.8 region, 10.9, and then we slammed lower towards the 10 region. So let's have a little look again, 10,450. Let's look at the precision on that so far. So around 10.4, $50 further down into profit. That is a pretty precise call. So, however, we cannot actually take credit for that. Well, I in particular cannot take credit for that. I can take credit for understanding and realizing that the projection would have come through. However, what we were anticipating before actually seeing this movement was that little push higher by an extra $200. So after catching the initial short from here when it slammed down to our first target, I did state, if I can actually find the prior tweets, what I was looking at here was any downside pressure to bring us towards 11,000, 10,900 first. From here, I'll dictate whether to close the trade entirely or take some profits off on a way to retest of 11.7 to 11.9. Then we can identify 10.9. Now, what I meant from that is once we hit, as you can see, the arrows were annotated here as well. So for those of you who have been a bit confused, I am actually making this as simplistic as possible. I mean, I've actually stripped clean the chart absolutely. I'm providing annotations and all of the key targets to take. There has been a few people saying we didn't know whether we were long or short. However, if you check the Telegram guys and Twitter, it's been incredibly clear we were actually looking to take a long, exactly in line with this, to retest 10.8 to 10.9 before actually inevitably coming down to the current levels we're at now. So the intentions were there, the projections were correct. However, we were looking to catch this move up to this trend line first before actually catching the short. And the reason being behind that move, very simple Fibonacci setup here. That was looking perfect. We have actually fulfilled both those targets now without seeing the retest. If you do add the 0.5%, no doubt this would probably be a very precise test of the 0.5. Even then, it didn't even hit, so we cannot even count that. Unfortunately, there was no Fibonacci in this specific setup, but I must admit I should have seen the signs. The key levels here, the ones that I've given out to you guys for a very long time now, please mimic my key levels, guys. They are so precise, it's unbelievable. After slapping below 11.6 and retesting this region, which was the first anticipated breakout region, we actually melted all the way down, and I should have seen this all hands up. Retest, break below support, retest, and absolutely die. That was one of the clearest factors that I should have paid attention to. However, the Fibonacci's are pretty much in line with my analysis and my strategy. I normally aim for some form of Fibonacci retracement before executing. Unfortunately, it's just one of them situations in the market. There's not much we can do about it. However, the beauty is it's still falling in line with everything we've expected. So whilst the majority was still expecting to blow through the roof and continue, I only provided that as a possibility, but I did say I was favoring the downside bias. So looking at this now, guys, I was actually anticipating a retest of some sorts before considering any positions. However, once switching over to the daily time frame, we are almost at our buy target region using the A, B, C, and the D extensions up here. Only now, when people are saying 13,000, 16,000 and all this rubbish, it was not going to happen unless we saw some form of drastic pullback before gearing up and testing this next move. This is exactly what I've been telling you. For anyone saying buy there at highs, very, very stupid. However, we did know as wizards that we would be expecting to buy upon this region here. I did say somewhere, I'll find the tweet at some point, I did pretty much state that as long as we see this pullback first, and of course XRP dropping down to these regions, only then can we begin gearing up for the next rally up towards the yearly highs. So for me right now, we're almost at the 61.8, but we have a crucial support level below, and we also have this trend line here unfulfilled. By all means, if you want to start dragging this out and doing this, the trend line confluence could most definitely add up with the 61.8 and support below. But if you drag this even lower from the wick to the body, we know this is how the market likes to play tricks. So it's down to us as calculated investors and wizards and traders to be a bit more patient. So all I'm doing is, and one thing I want to instill as well into you guys, is when a trade goes wrong, remember, first of all, you should never be wrecked from these trades. 1 to 2%, not even 2% most times. Just stick to 1%. The market is very volatile, and that 1% risk very easily lead to a 100% profit if you actually play your cards right. So just be cautious on that particular factor as well. When things go wrong, never rush to jump in. The biggest reason now, everyone's probably looking for the next move after being wiped out. I would say absolutely not. You know, I'm a big advocate of the no man's land regions. From key level to key level, we're currently fluctuated right in between, and looking at where the current 61.8 is as well, it doesn't make me very reassured that we could be seeing a reversal from here. It's all about missing out on the opportunities to get the highest probability so far. Unfortunately, this was gearing up to be absolutely perfect, but the key level maintained itself. So what we could be looking at before we actually go for, and what I'm waiting for, is a retest of the 78.6 and the trend line here. Could see some manipulation and wick fishing down to this region, but overall the projection for the lower spectrum of the $9,000 range is looking to come true. So I will be sitting tight and waiting for this region. anywhere around here. No matter how long it takes, it could at least go to around 9,600. So I do believe we'll be breaching lower than this trend line. I mean this Fibonacci ever so slightly, and even tapping one of these regions here. So using a rough projection, let's just say stop loss is below here, and then all the way up to here, you are looking at an incredible 4 to 12 risk to reward ratio, breaching even higher for the remainder of 2019. We could very easily be seeing this movement here. So do pay special attention. This is not a head and shoulders, but it is a very valid level over here. So we could be seeing another attempt to break this level, A, B, C, D, and absolutely rocket to the upside. So very simplistic setup actually, and a very clean analysis for what could be unfolding. Give or take, use this approximately. If you want to use an even wider stop loss, by all means do so. Or if you want to do the usual procedure of 20 to 30% of your position here, the rest drops down to there. You could even enter there with a tighter stop and the remainder of your position, and massively bolster your risk to reward ratio. So the setups are looking pretty cool. And again, just for you newbies who are a little bit confused on the setups, guys, this is as simple as it gets. We are not trading until we hit one of our regions here. So getting this here, risk to reward tool to make life easier. You could easily enter at the Fibonacci there, but then why would you, knowing that there is very clearly a trend line just below, a huge daily trend line. Now remember, a daily trend line of this magnitude would only hold up further validity when met. So it would be unwise to try and outtime the market or try and be smarter. Let the market come to you. As I always say, people say you're giving two scenarios back and forth. I will always give the two highest probability scenarios, but I will always say which one is most favored. And in this instance, there is no other scenario for me right now, except I either wait for this to get met or there is no trade executed. We are not here to rush into trades. We're here to be patient and calculated. And again, very simple, pause back. If you are within these regions here, the 78.6 and trend line, you can begin to identify your entries. Again, if this thing breaks and retests and slams through, we have to cut short, but that is trading, unfortunately. You can never be 100% certain. If you wait for 100% certainty, which is also impossible, by the way, you are likely going to miss opportunities. And it's often the executions you take during these fearful moments in the market where people are too scared to enter off a very solid candle is when you actually get those refined entries. If you look at this bullish candle here, if you were to enter here, then enter short here, you would have caught a very precise entry. But many people at that point in time would have seen a green candle up to here, not taken into consideration the key levels. They would have been looking at purely the candles, and they would be too scared to enter short. But those people who understand key levels would have very likely been able to catch a phenomenal trade. And the same goes for this scenario. If you see a huge bearish candle just tapping on this trend line here, that for me is an incredible buy setup, because from there, once it started testing this region, of course, wait a little bit, see if it taps and pushes up a little bit. That will then confirm to you there is some validity with this specific trend line and setup. Once it even pulls up in the slightest manner, whether that's $10, $20, $30, I would then execute from that region and then execute again if it closes around the 78.6, and then we catch this train back to 13,200. So there's something I want to mention as well. When it comes to calls, I'm seeing a lot of people doing this right now. If you call something from here up to, let's just say $13,000 or $16,000, and it's up here, people will then completely disregard this, wait for this to happen, pull all the way back up, and then claim the call came through. The same way our call was pretty much moving in line with our original projection, but we anticipated a long first. I cannot count that as a successful trade or setup. I can count it as the projection coming through, but it does not count as an actual accurate, realistic expectation. So please do not get caught up in that stuff. It's like me saying right now, BTC could go to $20,000, but before we get to $20,000, we drop all the way down to $1,000. Now, if that happened, would I be considered a very good analyst? No, probably not. So try and stay clear of all the commotion and mess and keep it simple. These charts right now are incredibly clean. Again, 78.6 there. All we'll do is leave that there for the time being. And I think we have a very good setup on our hands. I would just be cautious for the time being as well. Looking at BTC right now, please do not try and do anything crazy. Do not enter during no man's land. Key level of resistance above, key level of support just below. Price is located in between, which means any executions would be an absolutely and completely 50-50% gamble. We are not here to gamble. We are here to put the odds in our favor and make this thing work. Considering we've broken this level here, and considering we haven't retested yet, there could be retests anywhere from 10.8 up to 11,300. Should you start seeing the likes of 11,300 or 10,800 holding up, then by all means you can start identifying a quick intraday short opportunity down to this potential trend line. But knowing this is here right now, guys, there is no other setup that's valid. It looks incredibly easy and incredibly clean. And I believe once this lands to this region, we could have an amazing trade on our hands. But during these periods in the market as well, I have to reinstigate. We are currently in the holiday season, the holiday period, which means the Forex market, the stock market, and any other market right now is highly illiquid. Because to be honest with you, these whales, they're probably on holiday, they're probably on their yacht in Monaco, they could be in Cannes, they could be doing all kinds of crazy things. All I know is the market is quiet during summer because many people like to take a vacation, a break, whatever it may be. There is a lack of liquidity in the market. But what happens is there will be infrequent bursts from liquidity to illiquidity. As you saw over several days, huge amounts of liquidity hit this region, bang, slowly lost momentum and absolutely melted. So we are currently ranging back and forth like a yo-yo right now as the liquidity slowly starts to come back into the market. And if we look at the market cap right now as well, we are below that 300 billion number. So overall, it could be a very interesting end to the week, looking at how BTC could fall much further. So using this in line with everything else, this is very simple stuff, guys. Do not try and time any shorts, even from here, unless you actually see a retest of around 11,300. We are very simply going to sit on our hands for this one. There is no rush to be in the market. A setup of this magnitude would mean you're catching a move pretty much from 10,000 up to $13,000, even pushing 14.5. From there, we can start to identify 16. But that means you're looking at anywhere from 3,000 pips at the bare minimum for a single trade. So taking that into consideration, this is the main setup for now. How does that shift over to XRP? XRP, as of present, we've broken below. This for me is screaming 25 cents at the bare minimum. And as I said before, I was looking to enter long. I got out of that long opportunity after I started sensing some fear in the markets. As you can see, this zone that I've plotted over here as well is starting to give way. This for me is a major warning sign because not only have we now broken below, as I said, this weekly trend line here, we've actually broken it, and that was a big level of concern for me. So looking at that, there are several different ways to do this. This trend line started off here once upon a time, and now as of present, the present point in time, it's currently rejecting here. So at the bare minimum, in a very small terms of pullback, you could be looking at around 28.8 cents retested, which we've seen pretty much before, but you could see that this will push lower very soon. For me personally, looking at this setup right now, if I extend this over to, where was it? It was over here. You can see we've actually had this trend line holding up as well. It's broken, dropping to the 4 hour. You can see it's retested, broken, although it's not very precise. If I dragged that from that wick to there, you can see a bit more refined test, retest, fall lower. The same is now being said for the daily perspective. We've broken below, we've rejected. Not only have we broken below support and now rejected as resistance, we are now pulling lower. So it would be in your best interest to be very cautious of XRP as well. This trend line holds up incredibly well, but there are only so many times it can hold up without the next burst of manipulation occurring. Looking at this right now, guys, we've seen it before, so we have a very clear level to project where price can go. At the bare minimum, we start dipping into the 25 to 24 cents region. Let's just drag this down now as it looks to be unfolding as we speak. Even if you see that occurring, the fact this trend line's broken, you could catch a nice intraday long from this level as well. So let me just show you this very quickly. So even though we are still targeting this region, if you wanted any short-term trades, here's what you could do from this setup. Something very short and small if you want to actually catch a move like that. I wouldn't necessarily recommend it. I would actually recommend doing the opposite, which I'll get to in a second. But you could very easily make around 3 times your money with a simple setup like this, a quick 700 pips with a quick 212 risk. However, what I would personally be doing in this scenario, going from a weekly perspective in particular, this kind of price push would be one of the final pushes before you see the next huge upside explosion in the market. That means it would be in your best interest. Again, just checking my other trades as well. Gold absolutely rocketing. Entered gold from here. So this should easily hit 15.45. Just thought I'd throw that in. So I was having a quick check. Oil as well, just as I'm here, literally looking at this, guys. Looking to see this thing fall to potentially around 54 down to even the next leg lower. Quick move. It's all moving exactly like crypto right now as well, which is pretty cool to see. A, B, C, D looking down to $48 or so a barrel. It's looking pretty solid. Same goes for gold, easily just rocketing up to that region with a final target of 1564. Absolutely everything I do, guys, is purely down to a Fibonacci basis, and it's just the simplest way to trade, and it really works well in your favor. Trend lines, fibs, it works phenomenally well, and I'm happy to throw that all out there for free. As for XRP, just to finish off this analysis as well, I would be going for a very wide stop loss of around 500 pips, so your position size wouldn't need to be that large. But looking at this could be one of the final pushes before we start bursting through the absolute roof, and this is what I see unfolding. Looking at some trend line perspectives here, just to push that there, little fake out break there. Once this rides through here and breaks above the trend line, you would be retesting the trend line again, and we would start bursting towards all-time highs. Everyone's saying, you know, this is dead, that's dead, this, that. I don't believe it. Excuse me. We've seen this market collapse many times over. We've seen many rocky incidents in the market, but at the end of the day, this market is not dead. There is so much potential in the market right now. It would be very unwise to even try and do anything stupid. So, looking at this BTC, let's wait for that pullback. This would then correlate with XRP down to around 25 cents. Very wide stop loss needed, but we would then be blowing through the absolute roof. The same way BTC would start heading towards yearly highs, XRP would also begin doing the same. And even not in the worst case scenario, we would be targeting around 50 cents, give or take. If that was the case, you can then extend depending on how your target is. If you're going for a very long swing trade, it would be wise to have a fairly wide stop loss. But if you're going for a more shorter term move and you've managed to catch a very refined entry around 25 cents, then by all means necessary, you can have a nice tight stop loss and make around 6 to 7 times your money off a single trade. But in saying this, guys, please, please, please do not exceed more than 2% risk on a single trade. It does not matter if your stop loss gets hit, no matter what happens, as long as your stop loss is calculated, as long as your risk to reward is calculated, 1 to 2%, stop losses do not matter and losses do not matter. As you've seen how crazy these moves in the market are, every time a stop loss gets hit, you need to look at it this way. You're potentially losing 1 to 2% of your capital, but every other trade should be providing you at least 3 to 4 times your money, and at the bare minimum double. I've never given a single call away which has made less than double your money off a single trade. The moves you are catching in terms of pips are huge on a huge level. So there is plenty of money to be made. You can potentially lose 2%, but you're very likely going to make 100 or 200% off the next trade. So put that into perspective for 1 second. 3-4 losers in a row, let's say you lose 6 to 10%. Make one single trade back and you're looking to make over 100-200% off the next or following trades. Losing streaks can occur as well. We've been very fortunate not to have any for almost weeks or months now. All we have is the occasional loss in between, and I'm more than happy to accept that. That's part of the crypto game. That's something I will always be here for. When there are losses, when things go wrong, I'll be the first one to admit it and own up. And then it instills into you guys as well how it's completely normal. Because I literally look at them with 0 Fs in the world, and you guys should be approaching them the same as well. So guys, pay some attention to this analysis right now. Make sure your key levels are all aligned as per. Pay very special attention to XRP, because I do believe this thing will be absolutely rocketing very soon once hitting this level around here, around 25 cents. Buys can be executed from here. And for BTC, we are waiting for around 9,800, pushing down to that 9,596 region where longs can be activated. Focus on the trend line, not the Fibonacci, because the trend line can cause some trickery when the Fibonacci may not hold up too well. From there onwards, we're overall looking at long positions right now. Any intraday shorts you want to capture, just make sure it's off a retest of a key level at the bare minimum, although I do not advise that. So guys, see you in the Telegram very soon.